Hey, what's up, guys? It's rayBar checking in for another portfolio update. Today is actually Memorial Day, so the market is closed. You're seeing a couple movements here because I have a little bit of crypto in this account. But considering the market is down or closed, excuse me, what I wanted to go over is the cost basis on a position after you have been doing covered calls. So one of my videos that I posted a couple weeks back, easiest way to make 100 a week in passive income, covered calls. It was episode 8. Basically, I was explaining my covered call strategy that I've been doing on Plug Power. I've actually was running the wheel strategy on it, but since getting assigned, it's been basically covered calls. Like I said in my previous videos, I do need to do a cash secured put video and then combine the two to show you how to operate the wheel strategy. But essentially here with Plug Power, you'll notice I have 100 shares and my average cost is $9.50. Excuse me, sorry, I have a frog in my throat. But if you scroll down here, you'll see basically this is kind of the history that I had. And so on April 4th, I sold a cash secured put for $3 credit, and then I ended up getting assigned at $9.50. But if you think about it intrinsically, right, going back to that video that I explained how options work, each option contract is representative of 100 shares of the underlying stock. So essentially what you would do is you would take the premium here, for example, being $3, you would divide that by 100, making it 3 cents, right? So even though my position got assigned at $9.50, which is reflected in Robinhood, my actual cost basis is $9.47 or $947 of principal, right? So if you go through the chain here, if you'll notice, I started selling covered calls right after I got assigned. So there's a $17 credit, a $20 credit, $13 credit, $11, got a little bit from the lending program, $45, $3 again, and $15. So essentially, if you take all those premiums and then you add them up and then you take it out of my original cost basis, like I started at $9.50, and then right now it's sitting at about $823, right? So essentially, if you look at that, that's $77 plus 50, so over 120 some odd dollars that I have actually in the green. So whenever you're doing the covered call strategy, essentially what you're doing is you're buying back your original position through premium until your cost base is going to be effectively zero. So even though Robinhood is reflecting my average cost here at $9.50 and a market value of $826, because I've sold so many covered calls and have made back so much premium, on my P&L or profit and loss statement that I keep track of in Excel, my actual cost basis is $8.23, which basically is perfect, right? Because if you've seen over the last couple weeks here, Plug Power has essentially fell down, right? So in the last week, it was up to as high as $9, but basically it's been down about 8%, down to $8.26. So whenever you're selling your covered calls, you want to sell it above your cost basis. So that way, in the event that your shares get called away from you, you're not going to necessarily lose money on your original principal, right? And so normally I would be selling this $9.50 call right here for 5 cents times 100, so a $5 premium. But knowing that my actual cost basis is $8.23, I could easily sell this $8.50 call. And if my shares got called away from me at $8.50, I would essentially be making about 27 cents per share. Plus, I would make this 22 cents per share in premium, right? Bringing my total well above what appears to be that my brokerage is representing, right? So that's one thing to keep in mind when you're selling these calls. Eventually what will happen is if you continue the strategy, your cost basis will effectively be zero, right? And then in that case, you're literally going to be selling covered calls and making premium on house money, right? I'm thinking starting tomorrow, what I'm going to end up doing is I will be selling the 850 call. I don't believe that plug is going to shoot up too much more than that. But in a scenario like this, if you do feel as though the stock is going to go up, you don't want to sell right at the money, right? You'd probably want to sell this $9 call to make $10, effectively reducing your cost basis another 10 cents. So if that were the case for me, then my shares would be worth $8.13. But likely I'm going to sell this $8.50 call because I don't believe that we're going to go well above that. But if we do, understanding that my actual cost is $8.23, I'd be totally fine with that happening. And then basically what I would do is I would turn around, and up here in the top right, you're going to notice I click put. I would sell essentially a put at $45. So no matter which way, you're going to end up making money this way. And with the covered call strategy and the cash secured put strategy, you can literally print money as if you're Jerome Powell at the Federal Reserve. Again, it is Memorial Day. Shout out to all the veterans for your service. I do appreciate it. I'm sure everyone else does. Please go ahead and take this time to smash the like button, comment down below the stocks you're buying, if this video was helpful, what other content you would like to see. And for my loyal subscribers and viewers, if you're still here at this point of the video, comment America. I really appreciate you guys. Go ahead and check out some of my shorts too. I post a lot of stuff about gold and silver, just kind of really fun stuff. But please go back and watch the rest of my catalog. Again, I really appreciate all the support that I've been getting here. I've been on YouTube for about a month now. I got 276 subscribers and hopefully well on the way to 500, which is my next goal. Please help me reach that. Subscribe, like, and comment. Again, hope you guys have a wonderful Memorial Day weekend with your family and a successful day of trading starting tomorrow. Thank you. Have a wonderful weekend.